Hello and welcome back to Building Wealth on the Go, podcast by KLT Wealth Management. Today is December 17th, 2024, and we are back with Season 5, Episode 10 of our podcast. I'm your host, Brad Wilson, joined by my colleagues, Courtney Beach and 𝘽𝙪𝙞𝙤𝙛. Believe it or not, we are just mere weeks away from the end of 2024. Season 5 wrapping up today as we close out the year. By the time you're listening to this podcast, we are mere days away from 2025 showing up. So an exciting time for sure. We've got lots to sort of discuss and wrap up. This is kind of our big summary podcast of what happened this year in the economy and the markets. What's the current status of everything, and where do we see 2025 entering this picture, kicking off the new year and roaring with both the economy and the markets. So I think the first sort of most important thing to talk about is let's put our hindsight 2020 glasses on and look back to the year that was 2024. Joe, what are your thoughts sort of summarizing what we saw with regard to sort of the markets, the economy in 2024?
Yeah, it's sort of an interesting market at the beginning of 2024. I think we've talked about it, that was very, very narrow actual market. Very, very focused on the tech sector. Always that fear that the market would start selling off at some point in time. For most of the year, it didn't. We did see a bit of a pullback, I think, in August. Of course, we've been dealing with wars at the same time during 2024. That hasn't really stopped, or I should say. And a few have probably started near the end here, but ultimately, then the market started to broaden out a little bit more. We started seeing overall sort of growth in the overall market. And it seems like we're going to end the year in a pretty positive territory overall from a market point of view.
Yeah, it's been interesting for sure. And if the markets sort of stand pat, we don't see anything major in the next 2 weeks. This will be the first time since the 90s that we've had the S&P run 2 consecutive years over 20% returns. So it's been quite some time that we've seen this sort of strength for this period of time. So it's definitely interesting to kind of see how it plays out. Courtney, what are your sort of thoughts on where we saw the economy? There were lots of news headlines around sort of interest rates, what was going to happen throughout the year, and we saw it play out. And what are your thoughts and takeaways?
Well, I just watched our podcast from last year, and we were very pessimistic last year. We were like, we're not sure they're going to lower rates at all.
Yeah.
We don't know. We were waiting for a downturn. We were very pessimistic, and I don't know. I think this market surprised everyone. Everyone, but at the same time, this is the first year I think we've solidly put COVID behind us. I know we still have COVID out there, but this is the first year where we've been open and people are acting different than they used to. And maybe that's why people are trying to get back to this new normal.
I think, Courtney, you made a really great point there that I think everyone got it wrong in 2024. When looked back at what the forecasts were from the top analysts, the big institutions forecasting the S&P 500 growth for 2024, and the bears, the more conservative analysts, had the S&P being at 4,200 at the end of 2024. Here we are at almost 6,100. And the bullish of bulls had the S&P at 5,400, and we are over 10% higher than that today. So even the most excited people about the markets at the end of 2023 got this one wrong as well. They did not foresee the strength in the markets that we saw this year, especially in the US markets, driven by those big Magnificent Seven companies that really, through 2023 and 2024, have put the rest of the US market on its back and ran with it.
I think the biggest challenge too in coming into 2024 was inflation, right? We had such a high inflation rate coming into 2024 that everybody thought, oh, it's going to take a while for that inflation to start tickling down and stuff. So it finally did. And it came down a lot quicker than anticipated, be it maybe a bit of a softening in the economy. Maybe that's what kind of caused a little bit of inflation relief. Maybe, still feeling the whole COVID aspect, supply and demand, lots of demand, not enough supply. We kind of picked up on supply. So one thing or another, we started seeing it coming down, and that helped interest rates come down, and that became sort of a catalyst for business in general to say, okay, well, maybe there's still hope that we can continue to grow because interest rates have come down.
Yeah, and I think it was the Canadian economy definitely. You saw the softening and inflation down. We just got numbers out today. 1.9% is inflation here in Canada. So below 2%, right? And so now the bigger fear is, does that continue to go too low, right? It's that fine line of, you don't want this inflation number to get lower and lower and lower. At this point, you kind of want it to stay and stand pat. In the US, it seems to be they're fighting it a little bit more. And with the President-elect Trump coming in a matter of a month now, there's wonders that will they be able to continue to cutting interest rates because of his maybe business first mentality, and some of the spending. I know we talked about that, I think, last podcast, sort of those potential outcomes. So definitely some different scenarios between us here in Canada and the U.S. And given the U.S. is such a large scale, world power, that that's what everyone sort of focuses on. But really interesting sort of to see that disparity too, because we do rely heavily on the US for a lot of things, and so it will be interesting. But the interest rate's down from 5% to 3.25% here in Canada for the year. It's a pretty significant change.
I think it's reflective of how I kind of call it that the world is spinning faster than it used to, right? And I what I mean by that, it just seems like we're going through cycles a lot quicker than we used to back in the 70s and 80s and then even in the 90s, where cycles took like years to kind of clear up and go into the next cycle. We seem to kind of rotate a lot quicker. Be it technology, be it companies get up and going and grow really, really quickly, be it, economic stimulus, whatever it is, it just seems like we are spinning a lot quicker.
Yeah, no, for sure. I want to run off some numbers just to kind of recap where we've been this year. So these figures sort of as of end of day on the 16th of December, but S&P 500 up about 28% year to date. NASDAQ up just over 36%. Dow Jones up 12.5%. The S&P TSX here in Canada up over 20%. The Vanguard Total World Stock Index up about 19%. The Total World Bond flat for the year. Very interesting there that the bond market's still sort of struggling. Emerging markets up 10%, and the European Stock 50 Index up 10% as well. So kind of give you a glimmer of, or a glance at sort of what's going on. Interesting enough, the post, I will say, end of from November, December onwards, most of the markets, aside from U.S. markets, have actually really struggled. You look at emerging markets down about 8% since the Donald Trump election results. You look at Europe down as well. So some interesting fallout from that that sort of trickled into the economy. And one interesting stat I found as well is that a lot of retail money in index ETFs, there was a lot of outflows in November from Europe, Japan, emerging markets, bond index, and one of the biggest flows they've seen into U.S. index funds in November and December. And historically, one of the big stats is that when the retail money moves, they move late, and they're the first to get burned because they always move late and sort of miss out at that point in time. So kind of an interesting thought. The analyst who was speaking to this sort of spoke to the proceed with caution as we kind of look ahead. But some interesting notes to kind of see that money flow late in this year and really what that power behind the U.S. election had this time around, which we historically haven't seen anything like what we saw this year. So quite fascinating on that front. But sort of on the topics, we kind of summed up everything pretty well. One of the big topics, I think we can kind of look ahead now to 2025 and sort of kind of see what we've all recapped we'll transition into 2025 is let's start with the Canadian side of things. The political landscape's definitely been up in the air this past day, day or two that we since we've been recording. Lots of shuffle in cabinet here in Canada.
Unexpected shuffling.
Yeah, unexpected shuffle. Yeah. So, what are your thoughts there, Courtney, on what we've seen the last few days, and how is that going to sort of impact Canada as we look ahead to 2025?
Well, you never know what's going on behind closed doors, but you know, maybe the outlook is a new team is needed to deal with what's going on with down south. Maybe there's a feeling that we need fresh blood in order to deal with it because the team that they have now was the one who dealt with them the last time with Freeland and such. So I'm trying to be positive. It's kind of a little difficult because it was so sudden, but maybe that is the outlook that is being taken. So honestly, we're just wait and see at this point.
I think there's been unrest in our political system for a while now,
Mm-hmm.
and I think it you know reaches back to 2023 for sure, and it just kind of came to head right now. I think that's what's sort of happening, and it really doesn't bode well for Canada. I don't think it doesn't really put us forward as a strong nation. Because I strongly feel we're going to head into, if we're not already, into recessionary periods, right?
Mm-hmm.
And so we need something, someone or organization strong to kind of move us forward here, a political party that moves us forward. So it's going to be interesting to see 2025 and how it sort of shapes up. But on the political front, we're in shaky ground. We really are.
Yeah, I think it's been almost a foregone conclusion with the polls, at least. And, polls are not everything, but Pierre Poilievre and the Conservatives lead by a landslide when you look at what they're forecasting for the next Canadian election. And it's almost like it's being punted further and further away with all these confidence votes that keep being brought to the floor. And everyone says, oh, we'll vote against them. And then they don't vote against them. And they kind of continue on with status quo. And I've seen a lot of people say, all right, like with all this shuffling, just rip the Band-Aid off and let's head to the polls because at this point in time, it's almost just chaos that we're at the very most 9 months away from an election. We can't, what's doing it, moving it up a few extra months, right? And especially if we're entering into a brand new political, regime in the States there with Trump coming in, you maybe want fresh start from, you've got two brand new elected governments that can work together, hopefully for the betterment of Canadians and the betterment of the economy, because it does seem very chaotic heading into Christmas, and you've got all these people resigning all of the sudden, and no real strong direction ahead, like you sort of mentioned, Joe. So we'll be interested to see what comes from that.
Yeah, I think like you made a comment of work together, and I think deep down inside we have to work together in terms of Canada, US, and even Mexico and stuff, and we're gonna have some fallout. I think that there's gonna be some pullback here, and it's gonna be some issues that are going to come up and whatnot. But I think ultimately, long term, we have to kind of work together. I was told one time, with our relations in the U.S. and even into Mexico and stuff, that a vehicle, before a final vehicle rolls off the assembly line, like it probably crosses the border 8 to 10 times. So different parts and whatnot. So we are really interconnected that I don't think you can just stop that. I don't think you can just stop that, even if you implement tariffs. I think ultimately the tariffs would hurt the U.S. economy for sure. But again, I don't think that that's something that's going to necessarily turn off that relationship right at the beginning. That's my feelings.
Yeah. No, it'll be interesting to see sort of where we head. And sort of on that note, what's the state of the economy? Obviously, with all the chaos yesterday, the economic proposal was tabled with a potential $62 billion deficit. So again, a big number considering they were talking about closer to 40 billion originally. And we talk about the weakness already, inflation down to 1.9. I think there's going to be a big push to continue to cut interest rates at the beginning of next year. We're going to continue to see within Canada interest rates fall closer to get around that sort of 2%, 2 to 2.5% sort of standing point. So we'll probably continue to see that, and it's kind of a bit of a shaky waters. In my opinion, with the Canadian economy, they're kind of teetering with maybe still continuing to cut rates a little slowly. I think that's why you saw the 50 basis point cut we just saw here in December. But in my opinion, I think they're treading carefully with a lot of the numbers. I think there's a worry about unemployment rate continuing to go up. There's a worry still on the housing front. There's a worry in the construction industry. There's not going to be enough people to build homes. There's the costs, like the supply chain, like you mentioned, Joe. We're still having some of the effects. Yeah, some of it's been smoothed out, but the costs are still there, and we still have a lot of people who in need of housing. So there's still a lot of issues that need to be sorted out here. I really don't know where that's going to head, but I've got an inkling that they're treading very, very carefully and on pretty thin ice right now.
And also to add to that, like the world seems to be in conflict. Like I don't know what was about 2024, everyone came out of hiding and decided they were going to fight each other or within their own countries, because I think there's something like 92 nations in the world that are in some sort of conflict, whether it's with others or within their own borders. And that's a little scary because that's more than World War II, and maybe they're not all big names, they're the smaller countries, maybe emerging countries, some of them, but we're all interconnected. So how this is going to affect other nations is, I don't know how that's going to affect the economy, but it's going to affect it somehow.
Yeah, and a lot of civil unrest, right, within the borders. You're looking at France and stuff, and some of the Asian countries. Like we look at, South Korea, right? All of a sudden that popped up. So a lot of civil unrest where people are just at the point where enough's enough. Don't like the current regime, current political structure. Let's take it. Let's take it away, right?
Yeah.
And maybe that's where we're sitting here in Canada now, right? We don't like the political structure. Maybe it is time to stand up and but again, we're certainly not like other countries that we would do that, but it is interesting, as Courtney mentioned, that there's a lot more happening. A lot did happen in 2024. So 2025, maybe we start seeing a calming effect. Maybe people come to the realization that we do need to work together. Maybe we get some of these, wars kind of subdued or settled, but I don't think so. Like it says, it's never going to happen. There's always something that's on the go. I think some of these countries, some of these areas, they were in turmoil for years and years and years, like we're talking thousands of years, right? So like it's not a question that we're going to resolve things all in one. So I do want to be kind of paint a little bit of a rosy picture for 2025, but I want to be practical as well.
Yeah. No, I think that's great. And I think, we can continue to paint a little bit of a rosy picture, Joe, for 2025 when we look at the recent analyst predictions for the markets and sort of where that's heading, because we have seen some of the big institutions come out again, who all will reiterate all were wrong last year, but we're all under predicted what the market was going to do. But the average analyst prediction has the S&P 500 finishing the year somewhere between 65 and 6,700, meaning about a 7 to 10% increase in the S&P. from where it is today. The biggest bulls see the S&P being around 7,100 come the end of the year, which would be about of a 17% increase in the markets. So you do have a lot of analysts and big companies hopeful. I think what a lot of people are focusing on is the earnings numbers need to really, really support and will continue to be the drivers that prop up the market. I saw an interesting graph, and we'll share it here if anyone's watching on YouTube. The gap between the annual earnings between the Magnificent Seven and the remaining 493 companies in the S&P 500. And if you look at the graph that you'll sort of see right now, in 2023, the Magnificent Seven had a earnings growth of about 35%, and there was negative earnings growth for the remaining 493 companies. In 2024, the estimate based on numbers to date and what we've seen, it's slightly over 30% growth for the Magnificent Seven, and it's about a 3 or 4% growth. So the gap's coming down, and the forecast for 2025 is that gap's going to shrink to about a 3 or 4%. So what a lot of people are predicting is you're going to see a broadening out of a market that's been dragged along by 7 companies for the last 2 years. And that gap is going to continue to shrink over the next 2 years. And so I think that's where you'll see more support for what we've seen in the company. And that's what a lot of people are forecasting is the economy's been propped up, the markets have been propped up by these big names, and you're going to see support from other companies now rallying and having strong earnings, posting strong earnings, sort of post the years of the run that the Magnificent Sevens had. So interesting thoughts. I don't know your thoughts, Joe or Courtney, if you have any thoughts on sort of that there, but I thought that was an interesting sort of note that, you know, we talk about that narrow market, and yeah, we've seen some broadening, but it's still pretty narrow.
Yeah, we've been waiting for this broadening for what, years now, I want to say.
Yeah, it has been years since 2023.
It has been years. Yeah. So if it'll come this year, I don't know, because we thought it would come last year or the year before. So
yeah.
I think there are cycles like this where there is sort of such a concentration of certain companies that are really driving the markets, and everything is being pulled along and stuff. So that lends to the idea of a bubble, right? Are we heading into a bubble with this technology, with this AI? Is it priced in properly? Read an article this morning that talked about the fact that a lot of this AI is going to require a lot of money in order to create this and keep it sustainable. There's a lot of computer power here. We're talking quantum computing now, right? Like so that it's generating, like, you know, calculations in a split millisecond or whatever. So it's just, there's going to be a lot of money that's going to be required for that, which might sort of create the idea that, okay, maybe there is some overpricing here that has been done. So only time will tell.
Yeah, I think you're right on that front. You've even seen Nvidia down about 9% in the last month. So you're seeing sort of those companies, they need to be supported by earnings, or like you said, Joe, the money needs to keep going in there for them to be successful, and that's going to create a period of hard times, I think, for those companies really, really focusing on the likes of AI. So interesting to see for sure. And again, forecasts are a forecast. So we can always, some people say it's like throwing a dart at a dartboard. Like we did our recap of 2024, everyone got it wrong. No matter if you were a bull or a bear, everyone got it wrong. So
one thing that is certain next year, I want to just change the topic here before we go off to the air here, is the 2025 is going to be the year for mortgage renewals in Canada. We've been talking about this for a couple of years. A lot of people took opportunities to lock in low rate mortgages because they knew it was going to shoot up. And now they're coming due this year. So we're talking about 1.2 million mortgages in Canada that are due this year. So, I mean, I guess for them, it's great that the rates are lower. So we'll see if that actually works out for them.
Yeah, that'll be interesting to see come renewal time. Yeah, we have seen fixed rates come down, variable rates obviously dropping with each cut. So that will be interesting to sort of see how that plays out. We'll monitor that as the year sort of goes on the podcast, and keep everyone up to date on the mortgage renewal front. But yeah, that sort of wraps us up. But we'll leave everyone with the holidays with a final tip of the month from Joe, tip of 2024, let's say, Joe. So I hope you saved your best for last.
Yeah. So it's really tough to come up with a tip at year end and whatnot. And I believe this podcast will air on December 31st as we're sort of heading out to our New Year's Eve festivities. And so I think, there is a lesson learned in 2024 that, in terms of on the investing side and on the markets themselves, that nobody ever gets it right. I think that there's a lot of anticipation for one way or another. I think that the lesson to be learned is that you need to kind of stick with what your objective is, and just stick with your guns, work with your financial advisor if you have concerns, and often on the long term, you'll do well. I think chasing sort of returns is something that you don't want to get into, because, as much as returns go up, they will come down as well. But you need to have that long-term focus on whatever investment strategy that you've implemented. And on that note, really, I think from all of us at KLT, I just want to kind of wish everybody a happy new year into 2025, a safe and prosperous new year as well.
Absolutely. Yeah. So thank you everyone for tuning in for our podcasts, our season 5 here in 2024. Big thank you to everyone who is a regular subscriber, leaves those likes, shares the podcast with friends and family, and we will be back in the new year to kick things off with a fresh look at 2025, and really putting the pedal to the metal, foot forward for a wonderful new year. So wishing everyone a Merry Christmas, Happy Holidays, and we will see everyone in 2025.